Geeta, a few words on India. Growth for the current fiscal is pegged at 9%. That's broadly in line with what the first advance estimates locally have suggested. For next year, 9% growth that is being projected by the IMF. What are the underlying conditions you're expecting? You're expecting that some of the demand strength will persist. The sort of flip side of the story is that some people are concerned that consumption will start to weaken as underlying scarring starts to come to the fore.
So, India's has been recovering and it came back to pre-pandemic levels. But again, there is still quite a bit of gap between where India is right now in terms of its recovery and where its potential is in terms of the level of output it could have. And so there is the underlying momentum where we should continue to see a recovery both in consumption and in investment. It is a gradual recovery, especially relative to pre-pandemic trends. It's a gradual recovery. We have a very small downgrade for the current fiscal because of Omicron and because of its concentration in the first quarter of this year. And that kind of postpones the recovery a little bit, which is why the number for the next fiscal goes up. But, again, there is a lot of uncertainty. On the plus side, I would say that we're seeing that the stresses that we expected in the financial sector are somewhat less than what we were worried about last year. And that can be a positive in terms of the recovery. But again, this is, like I said, this is a pretty challenging environment. India is in, not just within itself, but also relative to the global economy, given US monetary policy tightening that's expected, the implications that could have for interest rates, the energy prices we still have, the geopolitical risks out there, energy prices could shoot up some more. And all of these would be challenges for India.
Geeta, locally, monetary policy has chosen to look through the higher than targeted inflation, the premise being that the underlying recovery is still fragile. But going into now the third year, do you think the baton would probably need to shift to fiscal policy to address some of that scarring, while the role of monetary policy should return very much to the prime mandate of inflation control?
So, inflation as such has been at the upper band, and core inflation has been pretty sticky at the upper end of the RBI's band. Now it's at 6%. So while it's not, substantially above that, and therefore in that sense is a bit different from some of the other countries you've been talking about, but this is something to keep an eye on. There is slack in the economy, so that gives you pause to say that we're still waiting for a recovery. But at the same time, these things can change pretty quickly. And if we have a prolonged period of inflation being stuck at a particular number, then that can shift, again, expectations there. So that's something to pay attention to. I think it would be helpful, again, the RBI has been communicating strongly, but to communicate some more on what it expects to do on the interest rate path, and especially in this global environment when the US Fed is going to start tightening interest rates.
A word on fiscal policy, Geeta, and this is something you allude to at a broader global level as well. After 2 years of expansive fiscal policy, fiscal headroom is lower in a number of EMs, including in India. And the debate is whether to use that headroom to spur capital expenditure, job growth, or to use that space to provide income support, job support via social security schemes such as a rural job guarantee scheme in India, for instance. That prioritization and that juggling is going to be tough this year.
Our view is that India's fiscal policy can stay accommodative for some more time, in the following sense, which is that if you look at the cyclically adjusted fiscal deficit, it should have more of a neutral stance, which means that the overall deficit would look somewhat accommodative. In terms of the pieces of where the budget should go on, there is certainly one piece that should address the very unequal recovery within the economy. And that dimension, making sure that the Rural Employment Guarantee Scheme remains well-funded, the fact that one could consider providing free food staples for somewhat longer as opposed to letting it expire in March. But the other big important areas where attention is needed is, again, more spending on health, on education, because there's been a big hit to learning. The schools have been shut down for a long time. There's been a big loss there. That has to be addressed. And The government has been doing a lot of public investment, infrastructure investment. That should be continued, including with the, helped with the asset monetization program. And all of this should be done while communicating a credible medium-term fiscal framework on how deficits will be brought down. I think that would be required to make sure that financing costs for India remain well behaved in this environment where we're now shifting towards interest rates going up in the major economies.